Hello, welcome. You're watching Business Morning live on Channels Television. I'm Ladi Williams. Great to have you join us. Let's take a look at what's happening in the world of business. Oil prices ticked lower today with investors waiting to see how major producers respond to the emergency crude release by major consuming countries designed to cool the market, even as data pointed to healthy U.S. fuel demand. U.S. West Texas Intermediate crude futures fell 9 cents to $78.30 a barrel, extending an 11-cent loss on Wednesday. Brent crude futures slipped 5 cents to $82.20 a barrel after losing 6 cents on Wednesday. All eyes are now on the Organization of Petroleum Exporting Countries, Russian allies together called OPEC+, who are due to meet next week to discuss oil demand and supply. And Unity Bank PLC has launched Yanga Account, an initiative aimed at promoting financial inclusion and women empowerment in Nigeria. The new retail product is also designed to deepen beneficial impact on micro, small, and medium enterprises operated by women in the mass market retail space. At the launch of the product in Mararaba, a few kilometers from the nation's capital, Abuja, the Managing Director and Chief Executive Officer of Unity Bank PLC, Mrs. Tomi Shomefun, says the Yanga account is a bold attempt to directly cater for women and their respective businesses. Do take a listen.
It's celebration time as Unity Bank PLC launches its new retail product, Yanga Account, targeted at Nigerian female entrepreneurs. The event has been attended mostly by market women, and the management of the bank explains the benefits of the initiative.
With that account, you have access to agents that will collect your money at the end of the day, agents that will assist you, agents that will do things for you and help you to do your business better. We will also be giving you small training to help you manage your affairs better. So we also have a health insurance scheme attached to this card. You open account.
When you open the Yanga account, it will be activated immediately and your life will be transformed.
After the explanations, the product is unveiled. Nollywood actress Shola Shobowale, also known as Toyin Tomato, is the ambassador of Yanga Account, and she excites the audience with her dance steps.
We are going to visit states and we're going to go to remote areas because we're going to go, this is for grassroots. So you see me everywhere, you see me flying everywhere now. Everywhere. In the market, you see me in farms, you see me everywhere, all this, even hamlets.
We're hoping that it sensitizes women all over, especially market women, business women, whatever kind of business they're doing, to come up and open savings accounts with Unity Bank so that they will reap the benefit of this product.
For the prospective customers, Yanga Account has come at the right time.
I know my stepping out today have changed already, and my life will full of Yanga, and anywhere I go, I will show.
Unity Bank have really tried. They have really tried to kind of take women higher.
Through products like Yanga Account, Unity Bank PLC hopes to keep providing the needed support for Nigerian women by enhancing their access to wealth-creating opportunities in the financial services sector.
Very interesting there. Well, to our first conversation now, the IMF in its Regional Economic Outlook report released at the October annual meeting is predicting that the pandemic has permanently lowered the path of real GDP in sub-Saharan Africa, suggesting a loss of real per capita output up close to 5.6%. The IMF estimates that sub-Saharan Africa's economy will grow by 3.7% this year and 3.8% in 2022, but notes that the region is on a different recovery path from much of the world. Nigeria, however, is projected to grow by 2.6% this year and 2.7% next year. Yesterday, the IMF resident representative to Nigeria, Ari Eisen, gave a breakdown of this report and what it means for Nigeria. He joins me now on the program to shed more light from our Abuja studio. Great to have you on the program.
Thank you
Good
very
morning,
much
Mr.
for
Ivan.
having me.
Yes, great to have you. So, One Planet, Two Worlds, Three Stories, that's the title of the Regional Economic Outlook recently released by your institution. How does that describe sub-Saharan African economy at a time like this?
Yes, we have one world, and there are global problems, and the pandemic really showed us that no one is going to be safe unless everyone is safe. Also, we have climate problems that are extremely important to be addressed on a global basis. So the message is that we have only one planet, and all of us live in this planet, and we need to work together so that global problems have global multilateral solutions to it. Then we have two worlds, and it makes reference exactly to the point you were raising, because Sub-Saharan Africa, for example, is growing at 3.7% this year, 3.8% next year, but other parts of the world are growing at much higher rates. So advanced economies are growing at north of 4.5%, 5%. Other emerging economies are growing at high rates. So there is a divergence that actually those countries who need to grow more are growing less to catch up in terms of income. So these are the two worlds that we are living in. And this divergence is, of course, very concerning. Then you have three stories. The three stories for Sub-Saharan Africa is that this inequality is growing also within the region. Some countries are doing better than others, particularly those countries resource intensive are doing worse than countries without natural resources. That is one aspect. At a time that policymakers are facing quite a bit of what we call a trilemma or dilemmas or trade-offs on the fiscal side. The need to raise revenues, but the economy is still not growing at robust rates. There are spending pressures still that are there from various sources. And finally, you have already a debt position that for many of our countries is already stretched. So this is the second story. And the third story, that this situation that I described requires international solidarity. We have certainly been doing our lion's share, if you wish, of this solidarity by providing assistance. We have started last year on an emergency basis. The IMF has been in the forefront to our member countries. And more recently with the SDR allocation that I'm sure you also followed. So
right.
These are trying to help our countries face the dilemmas and the challenges on the fiscal side, but also restore some of the buffers that were actually used during these difficult times.
Quite a trilemma, Mr. Eisen. Well, recently the IMF in its Article 4 consultation has advocated for subsidy removal, and the federal government is attuned to this recommendation. Meanwhile, the government is proposing a 5,000 naira grant for the vulnerable in society to cushion, the impact of subsidy removal. What's your take on this?
It's extremely important to be able to cushion the impact of the removal of fuel subsidies on the poor and more vulnerable. And that's the whole essence of the problem. The subsidy itself benefits the wealthiest disproportionately. And there must be a compact where everyone is aligned and understand that that is a very regressive type of subsidy and not very well targeted. There are better alternatives if better target could achieve the goal of protecting the most vulnerable in society. The important thing also is that given the fiscal position the government has, it's very important, and how costly the subsidy is really important to remove it so that fiscal sustainability can be brought back to the forefront. So it's a dual objective, is to really ensure that resources go to those who need the most, and it's also to reestablish fiscal sustainability. So these are the important objectives of the fuel subsidy removal.
But there are also concerns that this 5,000 naira grant is not quite effective, for this situation. Is there a better way the government can actually cushion the effect of this subsidy removal?
That really that's a very good question. I think this is in the purview of other IFIs who are really studying carefully, particularly the World Bank, what are the best mechanisms that could really ensure an effective protection of the most vulnerable. This is essential for the whole policy to be successful. If there are, I'm sure that the government will be able to find out what would be the most appropriate ways of compensating. The important thing, again, is that this is targeted for those who need the most and not generally for everyone, including those who don't need a subsidy. And that is a very important point. If 5,000 nairas for some period of time will allow those most vulnerable to be compensated with the removal, I think that could be a good way to compensate.
Well, quite an expensive way, I must say. But the IMF also advised the CBN to adopt a free float exchange rate regime. But, some would argue that this would push inflation further high. Government debt service already over 90% of revenue. That would go above 100%. How can the central bank actually navigate this dilemma?
First to correct, we are not advising on a floating exchange rate regime. Our member countries may decide if they want to peg to have a fixed exchange rate or a floating rate. I think what we are saying is basically two things, and we have said this before. First, and the central bank has started to do this, and we welcome very much, is the unification of the various windows into one window. That window has been the INE window, the investor and exporters window, where most of the transactions should take place. And this needs to be continued because there are still room to move in that direction. The second part is to flexibilize the regime in the sense that a market clearing rate is needed. And here, let me go a little bit in detail. Why is a market clearing rate needed? Simply because if you want to have an exchange rate that is below, it's not clearing supply and demand for foreign exchange, you need sufficient amount of reserves and buffers to be able to defend a particular rate. And this has been the story of Nigeria for quite some time, that many times you actually adjust the exchange rate precisely because you have run out of options given the level of the foreign exchange that you have available, particularly when a shock hits. And Nigeria has been vulnerable, susceptible to, for example, external shocks, particularly oil price shocks. So, now oil prices have recovered. We are in a better position to adjust the exchange rate to clear the market between supply and demand. This is what we have been saying. As regards to the impact on inflation, some of the products are priced already at a higher rate. But you are right, and everyone and the central bank should be concerned about the impact on inflation. It's at the end of the day, one, if not the most important objectives of the central bank, according to the Central Bank Act. So it's natural to hear that concern. And here it's very important to be able, in case there is an adjustment of the exchange rate, to tighten monetary policy, to tighten fiscal policy, to make sure that all policies, trade policies, structural policies, come together, because the exchange rate by itself is not going to resolve all the problems. And you could have inflation. So being very, very clear about the fact that if you do adjust the exchange rate, you may need to pay attention to these loop-sided effects of exchange rate to inflation and react appropriately to contain inflation is essential.
Nigeria is projected to grow by 2.6% this year and 2.7% next year. We're already, in the last quarter of the year. This certainly is very low compared to Nigeria's, potential. But do you see this becoming, a reality? And what factors will drive this growth?
Yes. The last two growth readings were very positive. The Q2, second quarter, and third quarter, 5%, 4%. These were high numbers. A lot of these is because of the contraction of last year. So there are base effects. Having said that, also Nigeria demonstrated quite a bit of resilience. And in 4 quarters, that contraction that was the slump that we saw in Q2 2020 is mostly recovered in terms of GDP levels, no? But what we are saying is that these 4-5% growth rates are unlikely to persist going forward, because there are lots of technical issues of base effects that actually led to those good results. Given what we have seen so far, and we hope we are wrong, we hope that Nigeria always grows by way more than the IMF is forecasting, of course. That's what we all want. But based on the policies and the current policies, we think that this is more or less what we see in the horizon, 2.5 to 3% in the medium term. And here is the problem. Population is growing at 2.5%, so you cannot really have a meaningful impact on GDP per capita and income per capita if you're growing at those rates. So it's very important to grow at higher rates. In our view, that will require much deeper reforms, resolving the fiscal situation, bringing balance, making sure that fiscal deficits are lower so they don't pressure interest rates and the debt position, bring macro stability, monetary and exchange rate policies take a different setting, continue on the unification and market clearing position of the exchange rate, and improving access to foreign exchange to the private sector. And on the trilemma we mentioned before, on the fiscal, ensure that the solution actually is in the private sector for the trilemma. The more the private sector can be the engine for growth of this wonderful economy, the better. And in fact, that is exactly what it's happening. Growth is going to be fostered by the ICT sector, which is doing very well for many, many years. Agriculture has been resilient. It needs more financing. It needs support. Trade and other services and communication, a lot of base effects, but they are also strong drivers of growth. Other sectors need to join so this can be broadened as it is broadening, and we are hoping for more broadening going forward with a clear change in the policy setting and macroeconomic stability. The important also thing I should say is that growth, as high as it might be, must be inclusive. It needs to bring all Nigerians together and benefit everyone. Not only some should benefit. And if it's only driven by the oil sector, a capital intensive, there must be mechanisms, particularly on policies, to actually make sure that other sectors can benefit, employment in other sectors can grow, and labor-intensive sectors, particularly SMEs, can also benefit from the higher growth rate.
All right, Mr. Eisen, quite a lot to do there. Well, we'll keep our outlook positive for the country. Thank you so much for coming on the program, Mr. Ari Eisen, IMF resident representative to Nigeria. Thank you for coming on Business Morning.
Thank you for having me. It's an honor and a pleasure to be with Channels again. Thank you.
Thank you. All right, after the break, commodities market update is next. Do stay with us. This is Business Morning. Welcome back. Still watching Business Morning live on Channels Television. Now it's commodities market update, and we have Nosika Nwajide, analyst at Financial Derivatives Company, joining us live in the studio. Great to have you on the program. Good morning.
Morning, always my pleasure.
Yeah. So the oil drama continues. We see the United States said it will release millions of barrels of oil, from the SPR in coordination with other consumers to try to cool prices. But it seems the opposite is happening here. We see the prices actually inching up.
Basically, it's one alliance versus another alliance. Historically, we've seen that OPEC and its allies, or OPEC in itself, OPEC is ready to do whatever it takes to stabilize prices. And in particular, Saudi Arabia. I mean, for years, they were a swing producer, cutting output and raising outputs as it suits them to stabilize prices. So while the U.S. has gone ahead to announce that it would pump 50 million barrels of oil into the market, I mean, the market initially was unperturbed. Like, how much impact would that have? Knowing that there's an OPEC meeting next week, OPEC has come out to say that we would not stand still and watch this just happen. We would take drastic action if necessary to stabilize prices. At the moment, OPEC is pumping an extra 400,000 barrels of oil per day into the market. It's possible. It's very possible that it would, if it needs to stop that completely, it's willing to do it. We've seen at the start of the pandemic, it drastically cut outputs just to push oil prices. At the time, oil prices fell to as low as, I know, WTI fell to even below zero. I mean, people think it's impossible. It happened. I mean, so that is, OPEC is coming out to say that, look, between our next, so we expect markets will be flat in the next couple of days until the meeting. Then we expect OPEC to announce either cuts. We'll wait to see the impact of the extra 50 million barrels of oil in a day. There's no detail as to, okay, how much on a daily basis is going to be entering the market. There's no detail as to how much China and India and Japan and the rest of the members of the alliance in the US are going to put into the markets. Obviously, there's Iran. They were looking over their shoulders at Iran and the possibility of a nuclear trade deal with the U.S. in the coming months, and that should put an extra 1 million barrels of oil. So taking all of that into consideration, right, OPEC are likely to either stand still on output or even cut output in the coming weeks.
Is that all OPEC has, as regards retaliation?
As regards the cards it has,
yes,
that's all it can do, and it's very impactful over the years. I mean, OPEC decides that they're going to cut outputs, prices respond, markets respond.
Okay, looking at these strategic reserves, what are they actually for? Is it for times like these to actually, manipulate price, or what is the use of these SPRs?
The short answer is no. Typically, it's not for times like this. It's for when maybe there's a shock in the global markets and there's scarcity. Typically, so okay, let's guarantee our supply to local consumption, so to speak. But these are extraordinary times. Like as the global economy is recovering from the negative effects of the pandemic. We're seeing that the demand is outpacing supply, not just for oil, not just for energy, but commodities across board. So prices are spiking. Those increases in prices are affecting inflation in advanced economies. U.S. inflation is at a 31-year high. So, and it's bad for politics. The most politically sensitive economic variables are inflation and unemployment. So inflation rising is not a good look for the Biden administration. So it's taking steps, extraordinary steps. We know that the Fed has indicated at a quicker than expected return to monetary policy normalization. So by mid next year, we'll see interest rates start rising. Interest rates start rising, that will curb inflation. For the meantime, you need oil prices to fall to lower what consumers spend on gasoline. So that is the one card it has to play. Initially, it went to OPEC to ask nicely that, you know, this 400,000 barrel a day, for extra 400,000 barrel a month increase, could it be ramped up a bit so that prices would, you know, trend downwards? And OPEC came out bluntly and said, no, it's not going to happen. We have our own concerns, we have our own problems, we have our own interests, you have yours. So
but looking at this tussle right now, who do you see actually winning this?
I mean, the U.S. strategic reserve is about 600 million barrels. I'm not sure. It remains unclear how much China have in its strategic reserve, and Japan and all the others. But it's OPEC might just play the waiting game, and you bring out your reserves. We cut down on output and let your oil be in the market. After a while, we'll ramp back up just to stabilize prices. You watch, as any action you take, you watch the market response, and if prices are moving one way, you act to bring it back the other way. So just to stabilize it.
Quite interesting, and I'm sure traders will be, you know, waiting to make profit with all of this volatility. Anyway, back here we see Melekiari, the GMD of NNPC, has assured that fuel subsidy removal, you know, will definitely be achieved by 2022. We can see fuel prices between 320 naira to about 340 naira per liter. I'm guessing it's time to brace up.
Yes, I mean, that's almost double. That's about double the price that we pay now. So obviously the impact is inflationary. I mean, transport costs will be much higher than they are now. If you spend 5,000 naira to fuel your tank, you probably spend 10. So do you not drive as much as you used to? Do you not go about your daily activities like you used to? That's probably not going to happen.
Even the alternative is expensive.
The alternative is expensive. Do you decide to get on the buses? Nigerians will make some adjustments, as we've always done, but this is here to stay. Subsidies have for long held Nigeria back. They've created so much unimpactful expenses on the part of the government. I mean, if we channeled all that money we spend on subsidies to transport infrastructure, for instance, having rail.
But what is this obsession with subsidy, though?
It's basically a chunk of money that the government spends to keep prices at a certain level, right? I remember sometime early last year when oil price, during the pandemic, oil prices fell. They fell so low that government actually reduced the price of fuel. Now, the prices have risen to $80 a barrel, and they are spending so much subsidizing it to keep it at 165 naira per liter. So, I mean, if you take it away and the prices go to 340, you pass on the burden of the cost to the people who buy fuel. The poor Nigerians will bear that burden, and it's the beneficiaries of these subsidies have been the richer Nigerians, the people who smuggle, because apparently you have market prices in our neighboring countries. So if you buy at this subsidized price, you can smuggle it across. The incentive is...
So this should actually end
the incentive is way too... So this should actually end smuggling. It's actually created... Because the truth is, the Petroleum Industry Act stipulates that subsidies will end. So obviously something that would take time, and early next year, initially it was June 2022, we're hearing that as early as February it could happen. So, and it's something that is welcome as long as the funds are channeled towards more impactful expenditure, especially transport infrastructure.
Yeah, and I spoke to Mr. Eisen about this 5,000 naira grant to cushion the impact of subsidy removal. What's your take on that?
The 40 million most vulnerable Nigerians, obviously.
40 million.
40 million
that's
most
quite expensive. 5,000 naira each. How's it going to get to?
That's the thing. We're not sure. I mean, during the pandemic, we hear that 5,000 naira was distributed to the poorest Nigerians. I'm not sure how many, but right now they've come up with a figure of 40 million Nigerians. This amounts about 2.4 trillion. 2.4 trillion on an annual basis, and if the subsidy costs about 250 billion per month now, which comes about 3 trillion. So you have, if you spend that, you have an extra 600 billion left. So as long as the poorest Nigerians, when they bear the brunt of the price increases, just when the price of fuel goes up, commodity prices will rise, transport costs will rise. So if you have an extra 5,000 naira,
but what can 5,000 naira really do?
You'll be shocked for the poorest Nigerians,
okay.
the 40 million most vulnerable Nigerians. You'll be shocked how much 5,000 naira could go a month. And but like you said, how do we determine who actually got the money?
Who's vulnerable? Am I vulnerable?
These 40 million Nigerians, do they have bank accounts? Are they financially included within
And I
the
hear
system?
that the e-naira is supposed to come into play somehow with this.
Well, it will be obviously be easier to track if you have the e-naira. You'll be easier to know the identities of these 40 million individuals or 40 million households. I'm not sure whether it's households or individuals. Obviously, be individuals. So in one household, you could have more than one person with an extra 5,000 naira a month. So if it's with the e-naira, you could track these deposits and you could track their expenses.
But this is vulnerable we're talking about, though. How do they have access to e-naira wallets? That's another
That's the
one.
thing. It's hard to tell. It's hard to tell because I know what we heard is during the pandemic, 5,000 naira cash was handed out to Nigerians. So having these people, many of them may not even have phones. And if they have phones, they may not have phones that can have the technology or capability of getting an e-naira wallet. So these are the issues that need to be sorted out before, hopefully by early next year, whenever they start this 5,000 naira deposits, these issues would have been sorted out.
Okay. Anyway, we see a report from ABS showing that intra-city fares jumped 36% in 1 year. What do you make of this? And, you know, higher fares will most likely, you know, stoke inflation and, you know, with what's coming next year.
Yes. So we already had fares in the last 1 year jump over 30%, but at the same time we've seen that inflation has moderated to 15%. A lot of people may not. It's not adding up to most people.
Yeah,
because within the cities, every price of every drop from point A to point B has gone up. I mean, I think it's more than 30% if you ask me, more than 30%. Because when prices went up during the pandemic, the prices have not come down. Transport costs have not come down from the time of the pandemic. And going forward, obviously, like you said, would increase the price of fuel, these prices will rise even further. So the impact will be inflationary, comes back to the 5,000 naira a month that will be given to lots of Nigerians to cushion the impact of the higher costs in the coming months or even coming years. And hopefully, as things stabilize, as the economy recovers, as more money is channeled towards more transport infrastructure, you could have real intra-city rail that's actually cheaper than taking buses or driving your own cars, and that would impact the lives of people more than actually sharing money.
Right. Okay. Looking at the goodies on your slide, you see World Bank has revised upward Nigeria's growth forecast about 2.7%. Is this in line with expectations?
I mean, I think the revision was based on a faster than expected growth in 2021. So Q2 at 5.01, Q3 at 4.03. I mean, that means that it exceeded all expectations. The outlook was for 2021 was about 2.1 or thereabouts, but the average growth now is over 3%. We exceeded that, and that's on base effects really. But going forward into 2022, obviously we expect reforms to continue. We expect that the subsidy removal will channel more funds into the hands of the government, and hopefully spending is more impactful. It's more impactful to stimulate the economy. There's also 656 billion that was sent to the states, and as they spend that, it's supposed to stimulate aggregate demand, stimulate output, and stimulate the recovery. And as that happens, obviously we might even exceed the 2.8 that was projected. Reforms in the oil sector with the passing of the PIA, if we can sort out electricity, power, become more competitive, will galvanize all the other sectors. There's even if insecurity has weighed down the agri sector, is something that if it's not tackled, it will continue to weigh down the agri sector. It's not something that's going to just fizzle out. So people need to be able to plant, be able to harvest, and be able to get these goods from point A to wherever their farms are to the markets, and let the prices, especially food prices, it will help bring down food inflation.
All right, talking about that 656 billion naira, you see it's going to be discounted about 15%.
Okay. Yes. Yes. There are 30-year notes at 9%, 2-year moratorium, and when they hit the market, the secondary market will be discounted at 15%, which will put pressure on interest rates. And obviously, we know these TB rates are how the governments borrow, basically. So if you put pressure on interest rates, we lower the cost of borrowing. So it's positive.
Quite a positive.
It's quite a positive.
Okay. Well, let's see. I see the domestic commodity price movement. I see price of gari, rice inching down, flours up, beans up. What's happening there?
Well, the thing is, as we approach Christmas, we expect this was expected. This is the festive season, increased demand for these commodities as people begin to spend and it's Christmas spending basically. If you start, I mean, no one waits till Christmas to actually start shopping for Christmas. So this time of the year, I mean, there's the impact of the harvest season which has faded off, and there's spending, Christmas-related spending. So that is increasing the price of commodities. Then for imported commodities like the flour and even sugar. Sugar is an alternative. Sugar is a source for ethanol. So ethanol-based sugar is an alternative to oil. So when oil prices rise, there's increased demand for sugar to produce ethanol, so that's impacting the price. So sugar prices are higher, wheat prices are higher because a major producer like the US, there's some issues around weather conditions, so wheat prices are at a 9-year high at the moment. So we expect floor prices to remain high for the time being.
All right, what's happening with agricultural commodities?
Again, like the onions, rice, a lot of it is seasonality and increased demand that has to do with the Yuletide. So we expect prices to remain elevated going into December and early next year. And
quite an interesting holiday coming. I'm trying hard to get into that holiday spirit, Nosike. I hope you're there.
I will get there eventually.
All right, Nosike Wajide, analyst, financial derivatives company. Thank you for coming on the program.
Thank you.
Another time this week. Thank you so much.
Always my pleasure.
All right, we'll take a moment now. Business Morning returns in a moment. Welcome back now to an opening call to the market. We have Willie Bong. How's it going, Will?
Good morning, laddie.
Morning.
It's quite cold. The market has been quite, dull. I'm expecting some fire in the market, but I'm not getting that. I'm not getting that. Yesterday it closed, mixed. They just mixed messages going around. I'm saying, is it negative? Is it positive? But it's actually negative because it was down 0.02% yesterday. That's about 2 basis points down to close at 43,245.02 points. It's the bearish trading continues, and that was due to late sell-offs in Stanbic IBTC stocks, which led the benchmark index to drop lower. And we also see that the market cap is at 22.565 trillion naira. Now we see the month-to-date and the year-to-date gains remained unchanged. Basically, there's no movement there. It's still about 2.9% and 7.4% each. Now we see total volume of transactions. Now that's where we saw an increase yesterday by about 11.6%. It wasn't by a very wide margin to 243.19 million units traded yesterday, and it was valued at 3.75 billion naira, and all in 3,777 deals. Now, Zenith Bank was the most traded stock by volume at 37.41 million units yesterday, while Nestle in Nigeria was the most traded stock by value at 1.06 billion naira. We're going to now talk to Tajuddin Olayinka, is a stockbroker at Valmont Securities Limited, to tell us what's happening in the market while we're seeing this lull that we're experiencing. Good morning, Tajuddin. Tajuddin, good morning.
Good morning.
Oh, it's good to have you this morning. But Tajuddin, tell us what's happening in the equities market. It seems to be falling into some kind of the days because it has traded negative now for 2 consecutive days. On Monday, it traded, on Tuesday, it traded 0.01% down.
Okay.
Now, yesterday,
I can hardly hear you, but if I heard you correctly, you have asked about what happened to the market. What is happening in the market generally?
Yes, what's happening in the market? It's trading negative for 2 consecutive days now.
Okay. Before close of market yesterday, market was still on the upbeat. We even see that in the closing price for. The closing prices of stocks. You could see that in the breadth of the market for yesterday. The drop in the market. It brought down the index, slightly, just to something 0.02%, just minus 0.02%. That was not totally significant. But then you cannot throw it away. So there were more buying interest in the market than we saw than the sell that we witnessed. So it actually happened because some slightly heavyweight stocks actually closed down just shortly before the close of market, particularly the Stanbic IBTC. We saw that before Stanbic came down to yesterday's level, index was on the upbeat, and at least we were having something a bit positive yesterday. So what happened was that those slightly heavyweight stocks like Stanbic, First Bank, SBN Holdings, and the Access Bank actually caused the index to drop slightly yesterday. But it's nothing to worry about at all, because we have had very strong bullish bullish sentiments over the last few weeks. So with index dropping yesterday, one shouldn't worry about that. It's just that normally when there are some heavyweight stocks in the list of losers, you tend to have all share index disrupted in a way. So, and I think that was what happened yesterday. It's nothing to worry about. Market is still on the upbeat, because after that yesterday, what we saw was that the best of the market was still very strong. So only fewer stocks caused the market caused the index to drop yesterday.
Stocks the large cap stocks that did well as well. We saw Lafarge, and some other stocks that did really well. So I was expecting that to probably counter the losses. And you said there's a positive market break, like you rightly observed, but what's really happening? What's influencing investors' moods in the market that's making the market still trade bearishly?
I'm struggling to hear you. I don't know why the audio is so low from your side here. I can hardly hear you.
So I'm wondering why the market is still trading low. You mentioned that there are other heavyweight stocks that dropped, but we also had Lafarge, which was up yesterday. Why wasn't Lafarge able to counter the loss in the market? It's a market giant.
Okay. Yes, fine. If you look at it on both sides, we had SBN Holdings, Access, and Stanbic. These are slightly heavyweight stocks, apart from heavyweight banking stocks. If you look at the drop in all these three banking stocks, they were above 1%. Stanbic was above 3%. SBN Holdings was above 2%, and the Access Bank was also above 1%. If you look at the combination of that compared to Lafarge, the weight of Lafarge will not be, and it wasn't so much. The gain on Lafarge wasn't so much as to warrant the reverse of index. Before Stanbic joined the trade, before Stanbic dropped finally, because I think Stanbic was one of the few stocks that closed the market yesterday. Before Stanbic dropped, market was still the index was on the positive side. So it wasn't anything. Nobody was actually expecting that the index would drop yesterday until Stanbic dropped. So you see that Stanbic, there are two heavyweight stocks there, First Bank and Access. So Stanbic went to join them. As soon as Stanbic joined them, the index dropped slightly. So yes, Lafarge moved up a bit yesterday, but it wasn't strong enough to reverse what Stanbic eventually did. I think those two heavyweight stocks, SBN Holdings, and don't forget, SBN Holdings has moved in its price by more than 50% over the past 3 years. Over the past few months. Yes. So if you look at that and add that to what Access is doing and what Stanbic is currently doing, obviously that the combination of those three stocks are heavyweight in the index.
Oh, that's rightly said. Now we're just going to move and see what's happening with Honeywell stocks, because it went down yesterday. It traded really down almost 10%. Now, what's the stake of stockbrokers, based on what EcoBank has said, as in the warning EcoBank gave against the purchase of Honeywell flour mills, to flour mills itself, saying that they shouldn't buy the stocks. And this is about 24 hours after the company has acquired company announced, the possible acquisition. So what are stockbrokers What's the stake of stockbrokers in this matter?
The move of stockbroking community was felt yesterday, shortly after that announcement. We saw that the price of Honeywell dropped. You know, in fact, it closed heavily down yesterday because the market wasn't in the mood of taking chances. So immediately that announcement was made, the price of Honeywell dropped. And that also have contributed to the loss we saw in the market yesterday. Now, it was that was normally an initial reaction. Market reacted because they had that negative news about Honeywell, and that the transaction won't move ahead as anymore. And that possibly also affected what happened to SBN Holdings as well, because there are two listed companies that are beneficiaries of that flour mills transaction. First Bank is benefiting in the sense that Honeywell is using that avenue to pay back his debt in First Bank, because CBN has said that First Bank, Honeywell to return the money he took from First Bank as against the shares it allotted to First Bank. So First Bank is also selling Honeywell shares to flour mills. So, and they are using the same evaluation metric to deal with the two. So First Bank is also a beneficiary, and that also was responsible for the drop in the share price of First Bank yesterday. Now, let's look at this. Let's look at what happened yesterday in a clearer perspective. Before flour mills came up with that transaction, there would have been very serious due diligence. They would have appointed retinue of advisors, those who are more knowledgeable in such transactions.
Okay. And
as such, these financial advisors will have taken them through the thick of what to expect.
Okay, Tajuddin, I know you have a lot of information to give regarding that matter, and possibly to be better discussed, on capital market. That's this Saturday, So, but for now, this is where we're just going to draw the curtain because we're really out of time now. So thank you, Tajuddin, for that input and that clarification on what's happening with Honeywell and flour mill stocks. Thank you so much, Tajuddin, for coming on.
Okay.
Now, Ladi, I'm just going to close with the NESD market and say that
quite a lot to chew there.
Negative sentiments are persisting everywhere. The NESD market is down 0.64%. This is the second consecutive day for the market as well. We're wondering what's happening in the market. And I'm just hoping that the bull comes out somewhere. Gives me a ride.
All right, Will, thank you so much. Let's see how the market closes today. Thank you for the update. All right, moving on to the crypto market. Now, we see the bulls are attempting to arrest a correction near $55,000 for Bitcoin there, but the bears are not willing to relent. Let's see how the market cap looks this morning. We see it's $2.59 trillion. It's up about 1.05%. You see 24-hour volume traded in the total crypto market there, $138.47 billion is up 8.90%. Bitcoin dominance, you see there 41.80%. Price of Bitcoins managed to get above that 56K. It's now at $57,216, up 1.35%. $34 billion is traded this morning on Bitcoin. Looking at top alts by market cap now, we see BNB there, $600, back above the $500 range there. It's up 3.64%. Cardano is not looking good this morning, down 1.04%. It's lost the $2 mark and seems to be going lower. Wonder why? Maybe a lot of profit taking going on with Cardano there. And we see Solana, $206. It's the biggest loser there, down 4.61%. XRP still head above water there, above $1 there. It's down. It's up 46 basis points. Now we see Ethereum there, $4,273. Ethereum has been holding quite strong. The bulls are defending that 4,000 range there. It's up 0.74%. 24-hour volume traded, $18.70 billion traded in Ethereum this morning. Let's look at the top 5 gainers. You see Gala topping there, up 50.29%. And Bora, $1.55. It's up 29%. So we see double-digit gains with the top gainers with some metaverse tokens there with Chili's, Mana, and Sand. All right, let's bring in Gilbert Jopata now to bring us up to speed. Hello, Gilbert. Good morning. Good morning, Gilbert, if you can hear me.
Yes, loud and clear.
Nice. So I see meme coins are not looking so good this morning. We see Shiba is down about 60% in the past weeks, while we see metaverse tokens actually taking all the shine, like Sand and Mana. What's actually going on with the meme tokens? Is it time to say goodbye to the memes?
Okay, it depends on an investor's plan and strategy. But right now, you could also see that Shiba isn't just down by 60% in the past week. You could also see that the total numbers of investors who are holding Shiba is losing grounds. Like so many people are letting go of Shiba at the moment. The attention of the market right now is gently turning into the metaverse. So investors' attention is in the metaverse. That's why you could see a couple of metaverse coins are mooning. So if an investor has a long-term plan on meme coins, that is probably good for such investor. But if such investor or trader is more of a momentum investor or trader, he should be looking into where the attention of investors and the market right now is in, and that is the metaverse right now.
Right, metaverse, and also play-to-earn tokens doing well. Gilbert, I wonder if you're playing and actually making money with some of these play-to-earn tokens. Anyway, Gilbert, thank you so much for coming on the program.
All right, thank you.
All right, that's it. Our fourth show today. Thank you so much for watching Business Morning. Do remember to join us at 1:30 for Business Incorporated for more business news around the world. Thank you so much for watching. I'm Ladi Williams. Enjoy the rest of your day.